Good evening, all. Ira Epstein with your financial market wrap-up, and this is your weekend edition, even though it is Sunday night, the 23rd of January 2022 at 7 p.m. I wanted to catch up with this, and I felt like doing it after the markets got themselves open to a degree. So please excuse that. I didn't put it out on Friday or Saturday. I'll try to get back into that habit for you. Before we get too far, as usual, I'm going to ask a favor of you. If you want certain markets for me to cover, write me on my YouTube page, and I will try to do it. It could be in the futures markets. It could be in the stocks. It could be in the ETFs, the spiders. Write me. Second thing, if you like these videos, click like. Third, I'm going to hold a live webinar this Thursday at 12:30 p.m. The invites have not gone out yet, but you can pre-register. Just take your cursor, move it up here anytime during these videos, and you'll be able to do so. Okay, so here we go again with the market starting off on a positive note. Will they fail is going to be the big question. Now, the good news is we got rid of I think it was trillions of dollars in option and values on Friday. I mean, a massive amount there. That is the good news. That is out of the way. But you still have a lot ahead of you. This is Fed week. This is when the Bank of Canada is going to give you numbers. You're going to get, as I understand it, some PMI numbers. And the numbers we're going to get, remember, are all backward looking when things were going pretty terrible. So the question is, how much more downside in the stock market is left? That's what you're really facing at this point. As we look at tonight, as I said, the stock market's up. The dollar index is up. Gold is up. Bonds and notes, they had rallied on Friday. They're giving some of that back. The question is there more of a rally left in them? And to me, it would be a short covering rally, not a fresh buying opportunity. On the energy markets, a nice little rally going on here. And most of the grains are up. Look at that wheat really catching on fire tonight, up about 10 cents. So when we take a look at a monthly area chart of closes, and that's how we'll start off on the weeklies, then we're going to go to on the weekly review, I start off with one monthly chart, and then I'm going to go to all weeklies for you. How's that? Got the grammar right. What you really have is a higher high and a lower low. You've broken through everything. For the month so far, you're down 7% on the S&P. When we come to the weekly charts, you can see how the market for the first time has gotten back under the 18-week moving average of closes. That's what that is. And we haven't done that and stayed under it for a long time. You have to go back to October of 2020 to find anything where we've stayed under it this long. So that means there is a change. And the change that is at hand is the Fed has changed its policy. The Fed is going to raise interest rates. It's expected to start in March. Many people think it'll be be it the March, the June, the September, the December. They think they'll roll off the balance sheet starting in May or June to the tune of upwards of $100 billion a month. Could be big numbers. Okay, what does that all mean? That's what people think. Things have a way of changing. Remember that. Just because a firm says this is what they're thinking doesn't mean it's right. So you've got to go with what the data is going to show the Fed. We are in correction territory on the charts. I don't care what people say about 10% corrections in the stock market and all that. Who made that up? I don't know. I don't care. You can see how the market has stayed under that number, and to me, that's important. When we come to a weekly bar chart, and that was just a monthly of closes, you can see how the market's gone from the 48.08 and a quarter down very sharply, got under the 4,400 to 43.81, and we're getting a small bounce right now. The resistance in the market back up at the 45.81.90 level. So from where you're at right now, about 160 points higher would be where I'd expect to see the first layer of resistance. The resistance in the market on the way up was the Bollinger Band, and very few people believe that. When you're going up there, I keep hearing, oh, it's going to poke through it, it's just going to keep running. Well, the same thing can be said on the downside. I would like to see the lower Bollinger Band hit so that the market can prove it's got its support at that level. Don't know if it'll do it. Nothing's always that easy. In momentum, it's down. So in summation, We have a market that's no longer trending. You have a higher high, lower low. The bias is down. The market, and that bias is because you're under the 18-week average, and momentum is still at this point pointing down as well. When we come into the Dow, basically what you did is you went from an upper Bollinger Band to a lower band, back to an upper band, back down and just shy of the lower band, and you're getting a bounce. Is that enough to tell you you're just whipping back and forth? And again, those Bollinger Bands kept the market on a weekly basis well behaved. I pointed that out to traders, and that's why when you put out a trade during the day, if you're going to try to hold it, always take a look to see where you're at in relation to those weekly charts. In the NASDAQ, you now have hit the lower bands in a market that's got momentum still down, the bias down, it's not trending. The question, how low is low? The first logical support is there. Does this market over time want to make a run at the 100-day average? The 200's way here, but that'd be another 40% drop, and I don't see any shot at that. I want to be clear on that. I find it very hard getting another 10% in this market down to the 100. That doesn't mean it can't happen. More important, there's no reason to be a buyer. The market's not trending on a weekly basis. When you come into the Russell, the argument holds better that it might want to make that run to the 100. What did I say has been the weakest for months on end of the indices? I get some wise guys that write me, oh, Ira, look at that Russell. Ha, you're not right on it. I've been right on it. This is the weakest of the indices on a chart basis. It's been coming down. 19,000 could be hit. Momentum still pointing to the downside. And unlike the other ones, for the first time with the opening tonight, you have the first time where the market's got both numbers that make up the slow stochastic under 20. Takes a long time to embed. It'll be towards mid-February if that's going to occur. But if it does, more downside. Right now, oversold. I tell clients never to go short under Bollinger Bands. I won't back off on what I say. In the 30-year bonds, you got to the lower band and you're getting a bounce. That's all that it is. The trend is clear. It's to the downside. I'm looking shortly for the 18-week average at 160.25 to get under the 200, the 159.11. It doesn't happen right away. This is a weekly chart. That's about a point away. You'd need another good-sized break, but time is more or less what's going to make that happen rather than pricing. When you come, to the 10-year note, I didn't want to run by that. I'm going to look for stiff resistance on rallies back into the 129.25 to 130.15 area. Again, the trend is still down. So while the daily charts knocked out the downtrends in both the bonds, the notes, and the 5-year note because they lost their embedded readings, this does not mean that the bigger picture has changed. It hasn't. That's the thing to remember. You're getting a bounce, much needed. In the dollar index, I call this a contra trend break. Market went in with the swing lines, lower highs, lower lows, has so far showed up right where it should have with support at the 200-day average in gray and the 100. Momentum, which had been pointing down, is now starting to skid to the right-hand side. If this market can get over, and I'll give you the number right here, 96.3260, that's this high that I'll point to it, that one. That would break the downtrend that we've been in the swing line. Because you've stayed over the 18-week average of closes, the bias has been up. The two have countered each other. And momentum, when you lost it on this chart, was looking to get back to the 18-day average of closes when you lose an embedded reading. I teach that in my enhanced Bollinger Band course. Bingo. There you go. At the end of this, I'll talk about that enhanced Bollinger Band course. It'll come up right after this. Do take a look at it. I think you'll find it fascinating. It's like getting your doctorate degree and understanding slow stochastic combination with Bollinger Bands. Suffice to say, that was the support zone. Now the market has to decide what is next. In the Eurocurrency, because 40% of the dollar index is made up of the euro, they flip-flop each other. The one thing I tell clients is don't be bearish the dollar and put on long necessarily in the euro. Why? If you're short on the actual futures and long the euro, it's like doubling up on your position. Why not go to another currency where you don't get that exact play in it? You can see how the market got up, just the flip-flop of the dollar, hit the 18-week average, failing there. It's just the opposite of what I said. Now, in the Canadian dollar, they're building in quite a bit of interest rate hikes into the Canadian dollar. The market is now anticipating it's going to follow just what the Fed is doing, going to move with it. You can see that the market's pulling back. It's a little difficult to want to go into these meetings. Right after the FOMC meeting, I think it's the next day, I'll check it for you, we get the Canadian dollar. I want to check the timing of them as to where they're at with each other. I could be wrong on what I said, but I know they're both this week. I don't like putting on new positions going into that if you don't have to. In the Japanese yen, where do you think I'm going to tell you resistance is? Look at this 18-week average. You're getting a bounce to it. We know that we had a lot of nervous money chasing this. When markets get nervous, they often buy the yen, the Swiss franc, U.S. Treasuries at times, right? Sometimes the dollar. Gold used to be one of those, but they don't seem to be doing that in nervous times anymore. Bitcoin is going more or less with the risk-off play that's hit the stock market. You do realize this market got down today to $35,425. So this is a market that has lost 50%. It was $70,000 just recently. This is a market that has lost 50% of its value now, just tumbling away. You're down to an area where between here and the 100-day, just like I said on stock indices, I'm looking for professional money to then be out of their shorts. I think they're coming out of the shorts on this heading down here anyways on these charts. That doesn't mean they're bullish. Not by a long stretch. It's just there might be a better place to sell again. You've got momentum down, bias down, trend down. Be nice to get a rally if you can get an embedded reading here, which you haven't done yet. The differential between Brent and WTI, well, for the first time in a while, you're starting to get back over with today's action, the 18-week average, which favors Brent gaining on WTI. For those of you that are on my morning subscribers, I think I was telling them on Friday, just go into the markets. I'm not going to tell you which way, but that's what I was telling them Friday morning. You're looking pretty good tonight. As you can see on all this, be sure you lock up some of your money. It's the simplest thing. You have momentum up, trend up, bias up, upper Bollinger Band targets, certainly all in place through here, as you can see. Now, energy should drop if people think the bottom's going to fall out of the stock markets via the world economies. It's not. That doesn't mean we can't soon get into a situation where we get surplus. Got to wait and see how this is all going to play out. A lot of movement going on with Iran. In a weird event of things, the United States ordered South Korea to unfreeze some of the money that it had told them to freeze via U.S. sanctions in Iran, use that money to pay the UN dues that Iran owns so Iran can get back its vote. In the weirdest move, it said tonight there'll be no further breakthroughs on negotiations if Iran doesn't release 4 U.S. hostages. Is the Biden administration going to make the same mistakes that the Obama administration looks like it did? I think that's where you're headed with the movement that's going on. It's sad. They're not to be trusted, Iran. You're better off with them where you got them cornered in many ways. But it appears that between Russia, China, and Biden, that isn't the play. Otherwise, why would these things happen? That's one way to look at it. As I said, look at these enhanced Bollinger Bands. If you're a student of Bollinger Bands, this is worthwhile. I'm Ira. I'll see you tomorrow. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.